Hey guys, welcome back to the Buying Orlando channel. Today we're talking about inflation and what does it look like to own real estate during times of inflation.
So this is a subject we've been talking a lot about, and one of my strong opinion is that real estate is more than a hedge against inflation. If you leverage real estate, it can create an opportunity to make a lot of money with other people's money, because what you're doing is you're leveraging an asset so if you're putting 20% down on a $100,000 home, $80,000 is other people's money, but you're getting the appreciation on the asset on that money. So that's why I love being leveraged in a potential inflationary period. But the other thing we were talking about, right, is rents can go up, right? So again, I've been showing my age a little bit around this business a long time. I've had rental properties for well over 30 years. What the rents were 30 years ago are hugely higher today on the same property. But if you had a fixed rate mortgage, your expenses stay the same. So now that inflation, you're getting more bang for your buck on an asset that's got a fixed payment. Or if you own it cash, that's great too. I mean, I'm not saying don't own assets cash. I love the peace of mind that comes with cash for people. But inflation is your friend in owning real estate, because again, real estate's going to track very similarly to the inflation rates. Where if you're just in cash or in the wrong assets, you could be literally losing money. In some of these countries that have hyperinflation, they're changing the prices on the menu every week. And it's true. And your cash in the bank is killing you. So in those places, they want to get their cash out of those countries so it doesn't continue to devalue. So that's what hyperinflation is. So
and we think it's timely because there's a lot of experts who predict at some point we're going to see an uptick in inflation again, and it could be more considerable at some point. And owning real estate's a great thing to have.
And some of the reason discussion again is because the Fed pumping $5 trillion in the economy. Now they're talking about an infrastructure bill of another $2 trillion. So when the Fed prints dollars, right, it's going to devalue the dollar. You got more money in circulation, it just devalues it. So 100 is a 50 down the road. So again, we talk.
The beauty of that, back to that analogy, 100 is a 50. Let's say you had a $100,000 loan on a property. That stays $100,000 nominal value. Its real value goes down to $50,000.
Right.
So it's your liability shrinks, and your assets should actually be increasing typically at least the value of inflation typically, and your rent's the same. So it's a beautiful thing. You can really win in a big way in real estate, whether you own it in cash or if you have it levered, it can actually pay off even more.
Yeah, and just a quick comment on Florida real estate. So we're anticipating an enormous amount of growth in this market. Obviously, construction, we're hearing prices rising quickly. So one way to hedge yourself against inflation, if you're not ready to move here, or you move your timeline up, because again, once you're in the game, then you're rising with everybody else. So the home doesn't become that less affordable in a year or two. I've seen that happen to people where they, even in the last couple of years, have gotten priced out of the market. So the sooner you can get your little foothold, the better.
That's a great point. And you can always have a second home, which we love. We love selling those and managing those, and at some point you can even move down into that too. So lots of good things. With all that, we'll leave you and see you in the next video.
Thank you.